What is a stock? Well, it's a financial security through which investors can become partners in a publicly traded companies. And we'll talk about what this publicly traded companies mean in a minute. Stock price is dependent on market conditions as well as market perception. Stocks may pay dividends and they may not. Stocks do not have maturity dates like bonds, and stocks are traded in shares. And publicly traded companies are the ones that issue stocks, and anybody can trade stocks. So let's take a look at some examples. I pulled up Yahoo Finance page for a few example stocks. This list includes Apple, Exxon, Boeing, JP Morgan Chase, Netflix, Amazon, and Facebook. So what you're looking at are the stocks that are issued by these companies, which are publicly traded versus a private company. A private company is a company that's owned by private individuals, and they are not, or they do not have wide shareholder bases. Whereas publicly companies are traded publicly and they may have thousands and millions of partners, shareholders, stockholders. What you're looking at is the lists, and each one has a symbol or a ticker symbol. These are the symbols that these stocks are traded by. For instance, AAPL is the symbol for Apple, and when we're trading this in the stock markets, we use this symbol to trade this stock. It has a price currently, well, it's a Sunday, the markets are closed, but the closing price as of Sunday was $189. This was a change of $1.08 compared to the previous day. And this change corresponded to about a 0.5% change from the previous day. Let's take a look at this. So Apple is a company, it's an incorporated company. It trades in NASDAQ and it trades in US dollars. At close price on May the 17th at 4 p.m. Eastern Time, the price actually closed at $189 even. You can see the previous close right here at 190.08, which was the price of the closing market the day before. And you see the chart right here for the past day. This is minute by minute. But if you look at, say, year to date, you can see that we started the year at $142 and the stock price went up all the way to $211.75. And then it descended a little bit and now it's trading at $189. So let's go back to our presentation. The price is dependent on the market conditions as well as market perception. So a stock has a real value, which is not that easy to know. And then the stock has a traded value. The traded value is this 189. But we have no way of knowing whether this 189 is the real value or it's not the real value. It is the perceived value, and therefore it is the traded value. So everybody in an equilibrium agrees that current price of Apple is $189. This reflects the value of Apple plus or minus the expectation for the future earning generating Apple company. You see the earnings per share right here as $11.89. This is what you earn as a shareholder of Apple in 1 year. You may not be getting paid this, but the company earns $11.89. That corresponds to 1 share in Apple. You basically are paying $189 right now to earn this $11.89. Now, this may be too much or this may be too little. That is the traded value, or based on the perception of the market participants, the traders, that is the going rate. Stocks may pay dividends. Not every stock do. So, for instance, Apple pays a dividend of $2.92, which corresponds to 1.46% of the stock price. if you look at its stock price for, say, Google, you'll see that the Google does not pay any dividends. Companies are not required to pay dividends. They may or they may not. There is no fixed frequency to pay dividends, although quarterly is very common. And they may decide to change the amount of dividend to go up, to go down, to start paying dividends, and to stop paying dividends. Although there's a dividend theory that argues that making these payments all of a sudden is a good signal and stopping dividend payments is a bad signal. We'll talk about that in a different lecture. So the stocks do not have maturity dates. So when you buy a stock, it usually does not have a maturity date or an expiration date. They are partnerships unless you sell them back or unless they were bought from you. Bonds, on the other hand, fixed income securities, have maturity dates. They mature on a fixed date. Derivatives like options or futures, they also have maturity dates. They mature on a specific date and sometimes at a specific time. Stocks are traded in shares. So what you're looking at right here is the Google's one share price. Used to be in the good old days that the stocks used to trade in lots of 100 or sometimes mini lots of 10. Options, for instance, trade in 100 shares in a lot. But what you see right now on the screen is the price of Google, $1,162.30 is a price for one share. Publicly traded companies issue stocks. Well, private companies are owned by individuals. However, their shares are not sold on stock exchanges. They're not traded on stock exchanges. And anybody can trade stocks. So you and I, institutions, governments, corporations, municipalities, anybody and everybody can trade stocks in the stock market. Thank you.